Hi, everyone. Thank you so much for joining us this evening for Stop Renting and Start Owning It's Easier Than You Think webinar. I'm Danielle Paluscio from Arizona Premier Real Estate Group at eXp Realty, and I'm joined by my co-host, Mike Wallace from Evolve Home Loans. So without further ado, we'll get started right away. We know your time is valuable, and let's get rolling. I'm going to go ahead and start sharing some slides, and we'll go from there. Just give me one moment. And there we go. So you are at Stop Renting, Start Owning It's Easier Than You Think webinar. And we are going to be talking about a few topics today: lending, how to maximize your credit score, how to qualify for little zero down payment loan options, how your student loans impact your ability to qualify, and how to minimize that impact, understanding the loan options available, comparing the pros and cons, and how to put yourself in a position to get the best rate and lowest closing costs. We're also going to be talking about some real estate, evaluating the benefits of home ownership versus renting, the home buying process, current market and market trends, realtor costs, and answering the age-old question, is now a good time to buy? So a little bit about us. As I said, I'm Danielle Paluscio with 20 plus years experience. I'm a team lead, top 1% in Arizona, top 3% at eXp. I have a variety of certifications that I've acquired over the years to fine tune my skill set. And I also work in new construction, resale, and I have a nationwide network of vetted realtors if you decide to move out of state. Mike Wallace, why don't you go ahead and pick up and tell us a little bit about you?
All right. Yeah. Thank you, Danielle. So yeah, I'm Mike Wallace with Evolve Home Loans. Been in the business for just over 30 years. Owned this company now for going over almost 25th year this year, I guess. Mortgage broker here in Arizona. We're licensed in Arizona, Colorado, Texas, Florida, Washington, and now California as of this week, actually. We specialize in all types of financing, but we have access to every type of loan out there, whether it's specialty loans, including physician loans, first-time home buyer loans, down payment assistance, any type of loan to refinance, build, new construction, things like that. The biggest, I guess, niche we have, or the difference between us and most lenders, is that, we don't charge the typical lender fees that most lenders charge. So that kind of differentiates us a little bit from the way that most lenders operate. And due to our structure and the way that the way we kind of run our operations, have very low overhead, so our rates are very, very competitive as well. So yep, that's a little bit about us. And yeah, we'll kind of get into some of the stuff about the pre-approval process and how to help take advantage of some of those things.
Okay, so we'll get started right away and start with Mike. He's going to talk about some lending.
Awesome. Yeah. So the first step in the process to buying a home is going to be going through and getting pre-approved. And so, a lot of people think, they want to, find the house, or, but the idea is first finding out what you can afford. And it comes down to a couple of things. I like to first differentiate between getting a pre-approval and a pre-qualification, so you kind of understand the difference and how we go about things there and how it puts you in a better position. So a pre-approval is a full in-depth review of all of your income and asset documents, your credit, your debt to income ratio, all of those things that we do in advance. We pre-underwrite your file and make sure that before you go out looking, that you're 100% approved and good to go, and that allows you to have a pre-approval letter and show that you're fully qualified when you go to purchase a home. It also, helps make the process go very smoothly, because you're not dealing with a lot of the stuff you normally have to deal with during the purchase process, where you're gathering documents and things that, might, cause you stress or slow things down. That's all done up front so that we make it a lot smoother for you when you're going through. Yeah, pre-qualification, on the other hand, that's just basically a quick credit review, an application, not even necessarily reviewing all of your documents, but it's just not quite as in-depth of a process as what we go through with the pre-approval. And yeah, so some of the advantages you get when you go and do a full pre-approval is your offer is going to be prioritized, because it's going to show that you're, again, as close to a cash offer as you can be with financing. And it really makes things go quickly and smoothly through the process, so that you can focus on the things that are important during the contract process, where you're, focusing on, the home inspection and making sure everything lines up there. So it kind of takes some weight off of that part of the process. And really the goal for us when we're going through this process, we want to review everything. We want to look at all the aspects of your personal situation and figure out how to put you in the best position to help you get the lowest rate, the lowest closing cost for your product, the loan you're looking at, and to find the best program that's kind of tailored to meet all of your needs. And we'll kind of talk about how we go through that on the next slides here. So, okay, thank you. So, getting the most out of your pre-approval. So the first thing you want to look to do really is maximize your credit score. And there's some things you can do before you start the process, and there's other things that we can help you do during the process. So there's the normal things you hear, like, you know, keeping your credit cards below a 30% limit of your available credit lines. There's also, you know, not going out and acquiring a lot of new debt prior to closing, not going through and having a lot of inquiries pulled by other lenders like car loans and other things that that might, you know, change your credit score. So it's okay to shop your credit score. We'll talk about that a little bit with different mortgage companies, but you don't want to do a lot of things outside of that when you're in this process to keep, you know, to again maintain and maximize your credit score. But one of the things that we do when we're going through the pre-approval process is we run a full credit simulator to really figure out how to optimize your score. So this is important for kind of a full range of credit scoring, whether you have a, you know, a lower score and you're trying to maximize and get it into a qualifying range, or sometimes whether you're already in a high score, you have a high score, but you want to see if you can get to the next kind of the next credit tier that might give you either a, you know, better interest rate or lower closing cost, or maybe even allow you to get into a loan product that would be better for you overall. So we're going to look at all the things you can do to help you get into that position, and I'll review those with you because there could be some very simple things you might not be aware of that might be able to help you kind of get up to that level. And just to touch on it again, you know, the credit bureaus do allow a 45-day free shopping period for mortgage companies only while you're going through that process. So when you have a mortgage credit pull, you can have a, you know, other mortgage credit pulls after that without dinging your credit score. So that helps you understand it's okay to shop your loan. You know, the credit bureaus want you to be able to shop your loan and get the best deal. And so, yeah, having a credit pull isn't a big deal once it's already been done, as long as it's by a mortgage company. So, yep. So then the next thing we're going to want to go into is we're going to want to look at your debt ratio. And your debt ratio effectively is broken down into two parts, right? So you have your income. So we're going to do an in-depth look at your income. If it's, you know, if it's simple income like W-2 and pay stub, it's very easy to review, but there might be some nuances like, you know, differences in pay structure, whether it's, you know, you have overtime, whether you have some types of incentive pay for different things. You know, we're going to look at all those things and try to maximize how much we can get in your qualifying income, which is going to allow you to, again, reduce your debt ratio and put you in the best position for the best, you know, the best loan product. On the debt side, it's a little bit more, there's a little bit more to that. So we're going to look over all of your debts and say, okay, what debts are we required to count against you in your debt ratio? And one of those things that always comes up for first-time homebuyers, or it seems to quite often, is student loan payments. So with student loan payments, there's a couple things you can look at there. You know, typically, when you're qualifying with a student loan payment and your loan is in deferment, it's going to show a zero payment on your credit report. And a lot of times people think, okay, well, that's great. I don't have to qualify with any payment. But unfortunately, that's not the case for most programs. You actually need to qualify with a payment that ranges usually between 0.5% to 1% of your balances. And when you're talking about student loans, again, if you're, you know, looking at something like, as an example, $100,000 in student loans is the equivalent to a $1,000 payment, or up to that when we're looking at your qualifying payment. So some things that you can do there to help minimize that would be to contact your student loan company and try to put together an income-based repayment plan that will likely yield a much lower payment than the estimated payments, and ultimately could have a positive impact on your credit score, which would, again, with your debt ratio, it's going to allow you to either qualify for more, you know, a bigger home, or potentially qualify with a lower debt ratio that would allow you to get into a better program. So really two options there. You can qualify for more, or it might lower your debt ratio into a better option for you. So, all right. And then kind of the third thing we're looking at is your down payment option. So this gets into really understanding the different programs out there. And we kind of break it down into, you know, three primary options. So we first talk about the for first-time buyers, the zero down options. So this gets into some of your physician loan options. It covers your down payment assistance and some of the first-time homebuyer programs that allow zero down. So generally, the benefit of zero down is obviously you're putting less into the property. You're making you're not making a down payment investment. You might still have some closing costs, and you might still have some other things that you have to cover when you're buying the home, but at least your down payment is zero. The downsides to the zero down payment program are typically it comes with a higher rate than a typical conventional or FHA program. So you're going to be qualifying with a little bit higher rate, and the higher rate and without a down payment, you're qualifying for a larger loan amount. So that could yield again a bigger payment that may not be as affordable for you in the long term. And the other thing to consider is on zero down options, a lot of times there are other closing costs that are in addition to typical loans that might make the closing costs more expensive. So while there are options where you can go zero down, potentially, depending on the market and the property and the seller and all the details, potentially get some concessions to cover your down or to cover your closing costs and ultimately walk into the home for zero down altogether. That's an option. We've definitely had clients that have done that. There's just a couple things to consider there when it comes to, again, affordability. Like, is the payment going to be in the range where you want to be? Does it allow you to qualify for as much as you want to, and those types of things. So that's the good and the bad with the zero down options. Minimal down, this kind of covers your conventional first-time homebuyer programs, your FHA loans, those types of things. And this is in the range of like 3 to 5%. So a typical low down payment option for a first-time buyer. And this is the good side of this program or these types of programs are you're going to get a lot better rates than a zero down option typically. So it's going to yield a lower payment and likely more affordable for you. And the downside really is that you're putting a little bit more down out of your own pocket, or those options also allow for your down payment to come from a gift. So you can fund your down payment from a gift as well. So it may not be your own funds, but maybe if you have access to a gift, it gives you the ability to get the lower and better rate from the more conventional option, but which keeps your payment down without having to dig into your own pocket. So, and then the last thing, this isn't a huge thing we look at for most first-time buyers, but if you're looking to put the most down to avoid mortgage insurance and really to just get the lowest possible payment, now you're talking about like a 20% down conventional loan option, no mortgage insurance. Again, it's going to yield the lowest overall payment, but it's going to have the largest out-of-pocket cost when you go to close. So those are all things we look at and consider when we're looking at options and trying to figure out what's going to be the best fit for each individual. So, all right. And then next slide. Thank you. Okay. So really the next step is just preparing to find your dream home. We've gone through your income, your credit, your assets. We've kind of looked at all the different variables and figured out, okay, how do we put all that together to really put you in the best position and go through the options that kind of align with what's going to be best for you. So we're going to go through, we'll review those options. We'll discuss the pluses and minuses, the advantages and disadvantages of each, and determine what overall is going to, allow you to kind of reach your goals when it comes to home ownership. So once we kind of figure out what that option is, we're going to move forward and prepare the pre-approval letter, and that'll allow you to kind of get out and start shopping. With confidence, you're going to be able to go out and make offers on homes and feel confident that not only do you know that you're approved in advance, but also all the details you want to understand about the financing before you start shopping. And that way you kind of have, all of that already predetermined and you know what to expect, which will, again, allow you to have a lot smoother process when you get into the shopping part. So, yeah, so that's all for me. That's our step in the process. That's how we kind of help you get in the best position there. And I'll turn it back to Danielle to talk about, starting to look for a home. So.
Fantastic. Thanks so much, Mike. That was awesome.
Of course.
So the first thing we're going to talk about is the benefits of home ownership versus renting. There are a lot of you out there that wonder, why should I buy a home versus renting? Renting is so easy, but there's a lot of benefits that we're going to take a look at, and we'll look at short-term and long-term benefits. So the short-term benefits of home ownership versus renting, you can see on the left-hand side, building equity, predictable payments, tax advantages, and creative control. So those are the major things that are great with home ownership for short term. And for renting, the positive things for short-term benefits are low upfront costs, flexibility, and minimal maintenance. So those are the things that you're used to if you're renting and you don't have home ownership. That's just a short term. In the long term, we have another set of things. For home ownership, you're building your wealth. Over time, you're going to have appreciation on the property. You're going to the property, if you think about your parents' home when they first purchased their property, and then 10, 15 years later, even 20 years later, how much those homes are worth. My parents owned a home for 40 years. They had bought it for 15,000 and sold it for 515. So you do over time always build wealth with real estate. Real estate is a proven wealth building system that every billionaire owns properties. You have fixed housing costs. Again, imagine 5 years ago or 10 years ago what the rental rates were. If you owned a home 10 years ago compared to now, you're paying 1,000 more a month in rent versus you would have a fixed mortgage rate, fixed mortgage payment. And so that wouldn't change for 30 years. That's amazing. That's a huge long-term benefit. Forced savings, basically when you're putting down a mortgage, paying down your mortgage, that also not only is the property increasing in value, but you're also paying down that mortgage, which helps build your equity as well. Retirement security, when you're ready to retire, your home will be paid off, and then you will have very, very low living expenses. Inflation, an inflation hedge. Home values always rise with inflation, and the rent just keeps increasing. So the value, again, this is another portion where you're building more equity. With renting, the pro long term is you're more liquid. Your money isn't tied up in a home. You can use it elsewhere. You can go on vacation. You can invest it in the stock market or do other investments. There's no market risk, so you don't have to worry about market downturns. Sometimes when we own a home and we have to move, the market may not be in the best position for you to sell, but you have to sell. And that's something that is definitely of a concern. So with renting, you don't have that risk. And it's easier to downsize. You don't have to sell a home if you decide to change your living situation, especially if you get divorced or if you're somebody gets sick and you need to change your living situation. So that is something that is a really positive thing about renting too. Overall, I truly believe that home ownership is definitely has more benefits, both short and long term, than renting. And if you can do it, which Mike showed you, you can do it with almost nothing down or zero down. It's a great option. So the home buying process in Arizona. It's fairly easy. You're going to get pre-approved for a mortgage with Mike. Then you're going to hire me as your real estate agent, which is going to educate you on the home buying process. We're going to sign a buyer broker agreement, which we'll talk about in a little bit. You'll have a strategy session to determine the location, condition of a home, the location where you want to be, the timing, how quickly you want to purchase a home, or if you want to buy in a year, and your wants versus your needs. We're also going to start searching for homes on the MLS, off-market listings, and we'll do in-person tours to find the right home. We'll submit a competitive offer based on the market conditions and comparable homes, so we make sure you're not going to overpay. We'll negotiate the terms with the seller on the price. We could possibly get seller paid closing costs, and there's 25 other items that we are going to negotiate on your contract. We're going to open escrow and deposit your earnest money. That's usually 1% of the purchase price, and that is refundable until we know for certain that we're past the inspection period and we know for certain that you're going to be closing on the home. We'll hire a home inspector that will look at your home top to bottom and let you know all of the issues, if there are any, with the home, so we can negotiate those repairs with a seller and you are happy with the home's condition and ready to move forward. We'll review the seller disclosures and HOA documents if it's in an HOA to make sure those are all positive for you. We'll negotiate the repairs based on the inspection reports, secure your financing. We'll also get an appraisal to make sure that the bank wants to make sure that you're not overpaying for the home. If you work with me, we've never had an appraisal that hasn't been either positive equity right at the beginning or met the contract price. Then we'll do a final walkthrough. Once everything is done, you'll sign all your closing paperwork. You'll submit your down payment and we'll get the closing funds. And then ownership is officially recorded when they record the deed in Arizona. Then we meet you to give you the keys and you get to move in. It's not a very busy process. Next is the current market trends and the current market and market trends. So the current market right now, we are in a slight buyer's market. There are 25,000 plus homes on the market, which is very good for buyers. That gives you a lot of choice. It's not good for sellers because currently that shows that the demand is not very high. In Phoenix, anything over 20,000 homes puts us in a balanced market. And then now that we're up at 25,000 homes, that puts us in a slight buyer, more of a buyer's market rather than a balanced market. Usually if we drop below 18,000 homes, we start to get into a seller's market. And just to give you a little bit of perspective, when we were in 2020, when the market was really crazy in Phoenix, we only had 3,000 homes. So that gives you a little bit of an idea. Right now, also, sellers are giving concessions. We have 47% of sellers that are giving concessions on their closings, which means they'll be paying for your closing costs, paying for some of the repairs, and or buying down your interest rate. We also have an increase in price reductions, and days on market for homes is a little bit longer. Interest rates are still a little bit higher. They're not quite where most buyers want to be right now to make affordability a little bit better, but that's okay. We always say marry the house and date the rate, because once you get into a house, especially you want to get in during a buyer's market when we can get a great deal, and then you can always refinance the home at a later date to lower your rate and your payment. So just to give you an idea, here's annual appreciation for the past 83 years. And this is nationwide. In Arizona, usually we have 5 to 11% of appreciation each year. And we are a growing city, so that is going to continue. And in 83 years, you can see only 6 years, we had a negative appreciation. And 4 of those 5, actually 5 of those 6 were in the market crash in 2007. Other than that, you can see that home ownership, you always have a steady appreciation, which is great. Realtor costs. A lot of people ask, okay, what does it cost me to use a realtor? Well, a realtor is negotiable. You will talk to your realtor and interview them. Part of your discussion is seeing their skill set, finding out what they will do for you, and then negotiate how much they are going to pay, or how much you have to pay your realtor. Right now, the buyer is responsible to pay the realtor's costs, but because we're in a buyer's market, we're able to negotiate that with the seller. So the seller is actually paying your realtor's costs, even though you're responsible for it. That's part of our negotiations. You'll have to sign a buyer broker agreement, which is a contract with your realtor before you start looking at homes. That is mandatory in Arizona and basically nationwide at this point. And that, again, you have a person with a lot of expertise to guide you through the process. And the seller will likely, most likely pay those costs, so you won't have any out of pocket. A lot of people ask, what does a realtor do? Well, we do quite a bit. These are the top 20 things that we do. I'm not going to go through them all. You can read the slide and see what we do, but these are your top 20 things that we do. There's quite a bit. People always think that buying a home is very easy, and it can be very complicated. You need a professional to guide you through the process. I always say it's just like a lawyer. You can legally represent yourself in a court of law, but do you want to? You don't know the ins and outs. So most people will hire a lawyer instead of representing themselves. This way they get the best possible representation. Same with a realtor. You want the best possible representation, especially if you're in the negotiation process, and the seller is going to pay for our compensation for you. So is now a good time to buy? I always say it's always a good time to buy if you're ready to move and solidify your wealth and have a stable payment and find a good place to live. So if it's good time to buy for you, it's always a good time to buy. Buyers markets obviously are better, but if you have a good realtor, you're going to be able to negotiate a great deal and you make your money on the buy. Here's just a little example of 2021 versus now. If you look at the list price, if it was the same list price then and now, in 2021, it was a seller's market. So it was very, very competitive. People were paying much higher than list price in order to secure a property. So in this case, somebody paid $475,000 on a home that was only $400,000. The interest rate was only 3.5%. And they did a 10% down payment, which was $47,500. That made the monthly payment $1,920. Compared to now, if the list price is 400,000, we can usually negotiate it down. In this case, we did to 375. The interest rate is higher. It's 3 point higher at 6.5%. But because it's a lower sales price, you have a lower down payment, even still at 10%. And then your monthly payment is $2,133, which is only $200 more than if you were to purchase your home in 2021. So you can take that extra 10,000 that you didn't need to use on the down payment. You can buy down your interest rate. You can use it to redecorate the house or do some improvements that you want. And there's lots of different things that you can do. Mike, do you have something to add for this example?
Yeah, absolutely. So yeah, I mean, I agree. Number one, of course, that a buyer's market is the right time to buy. So I think sometimes people, from our perspective, the financing perspective, get caught up on the rate, and they say, okay, well, rates are in the 6% range right now. They're actually trending down a little bit, which is great this week, but they're still higher than where we want them to be and where we likely expect them to be. So sometimes the people we talk to, their thoughts are, well, we'll just wait to buy until the rates come down to the 5% range, and we'll get a better, better rate and a better better payment. But that's, like Danielle just pointed out, that's not the case, because as rates come down, the market shifts. It becomes more of a seller's market. Prices go up. So you're going to pay more for that same house. You're going to pay a lower rate. Sure, you're probably going to still be at a higher payment because you're financing more. And ultimately, you're walking away from a lot of equity. So, I mean, it's just great advice to buy in a buyer's market and to secure a good price while, while that opportunity is there, because you'll always have the opportunity to refinance to a better rate when that comes, and really get the best of both worlds. You'll have gotten a good price, which, like Danielle says, you make money on the buy, and then you can get the better rate when the rates drop, and really, again, kind of get the best of everything. So, yeah,
Yeah,
that's my piece.
marry the house and date that rate.
There you go.
All right, that's about it for all of the information we wanted to share. We're going to go into our Q&A session. We're going to go ahead and stop the screen sharing and stop recording, and then we'll go ahead and answer all of your questions. So just give me a minute to stop that screen sharing and stop the recording.